We start the today's market talk. To invest better than others, one must think better than the others. Most of the time, we solely focus on immediate consequences and neglect further consequences down the road. That is, we only think first order and don't think about the second order effects. Prospect of higher returns increase with added risk, but so does the variability of returns also. Market moves between fear and greed, so investors with good feeling for market extremes can profit from fear of other investors by buying stocks at cheaper valuations. Market setup, as I see it, stocks across the world rebounded smartly after a small initial pullback this week after the latest conflict in the Middle East. The bet is that the conflict will remain contained and it will not affect the oil producers and prices. So, till now, the base case is that this will not spill over into a broader conflict. IMF's Global Financial Stability Report has attributed the rally in the markets since April 2023 to investors expecting a soft landing for global economy and especially for the US. The immediate reason for the rebound in the US markets this week was the soothing noises made by Fed speakers who said the rise in bond yields may have done the Fed's job. Any increase from here in uncertainty will be a reason for central banks to start cutting rates. IMF has already upped the US GDP growth for current year and next year. Belief is that aggregate demand will slow down, labor markets tightness will ease, and price pressures will fade, which this is what is boosting the investors' appetite. India's September CPI inflation came at 5.02% year on year, lower than the consensus forecast of 5.4%. SIP amounts continued to grow in the last month as well, now reaching a new high of Rs 16,000 crore per month, which is giving the basic fillip to the markets. In the first set of results, all three IT majors that came out with results had some chinks in their armor. All three showed a headcount reduction, posted revenues lower than estimates, or guidance lower than earlier. Infosys lowered the FY24 guidance, so which points to a weak second half because this quarter was reasonably good. They are riding on four mega deals. Company announced a deal flow of $7.7 billion. The reason for slowdown is the reduction in discretionary spending. At FY24 EPS of around 62, you can safely give it a PE of around 2022. That is a fair value of around 1300 to 1350. HCL Tech, they gave a lower revenue guidance for FY24. They reduced the revenue guidance from 6 to 8% to 4 to 5%. But for them, the second half, as per them, looks better with record order inflows. The other good part about them is that their valuation is still reasonable and they have a good dividend yield. They have maintained the margin guidance of 18 to 19%, and at FY24 EPS of around 59, which is similar to what Infosys is having, they are relatively less expensive. The dividend yield is 3 to 3.8%. TCS, in contrast, though came up with strong deal wins, but they showed a growth deceleration. Q&Q revenue fell by 0.2% in dollar terms. Growth recovery may come in FY25 based on mega deals, but that is still some time away. Continuous slowdown across key verticals, banking, financial services, insurance, retail, and geographies of US and Europe is hurting the revenues and the profits. though the total contract value of deals in Q2 was $11.2 billion. Engineers India has seen a good traction in fresh orders in the past 6 months, resulting in substantial increase in its outstanding order book, which now stands at rupees 8,100 crores. It's a leading PSU in domestic hydrocarbon engineering space. FY24 operating margins have improved to 8.5%. The stock has also moved in the last 6 months or so from around 70-75 levels to around 140 now, and it's at 18 PE for FY25 earnings with a dividend yield of 2%. They have a annual revenue of around 3,000 to 3,500 crores. So the order book is giving a visibility of 2 years earnings. And in case the PSUs are going to do some more capex, that is the OMCs, then they are likely to win more orders. Change in leadership in January has been one of the catalysts for BSE stock performance. They have taken measures to revive volumes, which are showing results in derivatives segment. Market share in derivatives has improved from 7.4% in September, and earlier in April this year only it was nil. Sensex and Bankex derivative contracts have been launched and lot size reduced and expiry days have been changed. So there is a good momentum in this stock, but at these valuations, the stock has become slightly expensive. Kaynes is an integrated EMS player, growing the fastest among its peers and well diversified vertically and horizontally. Its key segments include automotives, industrials, aerospace, defense, medical, railways, IT, and IoT. It has highest EBITDA margins at around 14.9% among all its EMS peers. It is expensive because FY25 expected earning at around 40. It is at around 70 P right now. It has recently signed a MOU for setting up outsourced semiconductor assembly and testing and compound semiconductor manufacturing facility in Telangana, which led to recent move in the stock. Coming to certain technicals, US this is the US dollar index daily chart. So if you see, the dollar index is now in an uptrend and is trading above its 20 EMA, and it had a spike on Friday after the recent fall from the higher level. Uh, so this is a thing to be kept in mind, because if the dollar index goes up, then the metals and other commodities correct. So this is a thing, as uncertainty across the world increases, all the risk money starts moving into US dollar, which is the safest asset.
USD INR obviously was became weak after that because the dollar strengthened and it has reached around 83.23. So it has a basically an impact on the people who have borrowed from abroad. The US yield, which is very interesting thing. US 10-year yield went up. This is a weekly chart and corrected last week, which led to the rally all over the world. I think they corrected on Tuesday after the good commentary from Fed officials, and then the all the stocks, even the US markets, recovered from there. So it is around 4.6. But if you see from 2021, it is at the highest levels right now, and it is constantly now above the 20 EMA, and it is trending upwards. Brent crude, it went up to 96 odd, and then suddenly on lower demand expectation, it had a big fall. It went to around 84, 85, and with this new conflict emerging and possible escalation expected, it's on Friday it went from around 88 level to around 91. So again, it went up above the 20 EMA on Friday only. So expectations of escalation over the weekend is again increased. Gold, gold, if you see, It's interesting. Again, gold is a basically a symbol of uncertainty. So, moment there is more uncertainty, the gold prices go up, and it went up suddenly, spiked around 3-4% on Friday. So, from around 1877 levels where it was floundering, it went up to 1932, and it was having a declining trend line. So, it has broken out from there. So, let's see how this conflict progresses. Though it made a base at around 1800. Dow Jones, it took support at around 33,000 and now it has gone up. It is trying to break through its 20 EMA. So that will depend on how their bond yields move and other issues, and how the results come also, because despite good results, the stocks corrected on Friday. India's 10-year yield, it went up, spiked up, and now it has corrected to somewhere around 7.2, 7.3 odd. But the point is still, it spiked because after the RBI MPC meet, when they said they were going to sell bonds to take out liquidity from the market, but it is still below, and it is expected to go up because the RBI is likely to be slightly strict with inflation and the money supply. Nifty 50 weekly charts, if you see, it's in a channel, and it is going up, or you can say that it is making higher highs and higher lows. So this is a rising trend line. It is making higher highs and higher lows, and presently trading on weekly chart above the 20 EMA, and it had a green candle last week despite everything which was wrong in this world. So uh, likely to the trend has not changed. Very clearly, the trend for Nifty has not changed, and all dips are a buying opportunity. Nifty 50, this is a daily chart. So if you see here, this is the retracement of the last rally. It went to around 20,200 plus, and from there it came down to below 19,300. So it is trying to go to that 61.8% retracement, and then it has corrected from there. So right now it has tried to cross the 20 EMA, and in my view, it is likely to face resistance at this 19,880 levels. But it is still strong right now. Until the time it remains above 20 EMA, the possibility of it going up is pretty high. But only thing is that it has become very volatile. Nifty, and every day, last few days, if you are seeing these gap ups. So the week we had a positive gap ups or gap downs. So in this last week we managed to take out a positive candle for Nifty, but I'll show you Nifty Bank subsequently. This is the Nifty option chain. Highest open interest is at 19,700 for puts and 19,800 for calls. So roughly these should be the range 19,650 to 19,850 as per the option data. Though there is a lot of call writing at 20,000 also, and similarly at lower levels there is put writing. So it is interesting, but the interesting part is that people are adding calls in the money. So if you see here, on Friday there was an addition of 49,000 calls at 1700 also. So that means people are so have a strong conviction that markets will not rise above these levels. So they are very well protected. So one has to be careful. And though in case the market goes up, all of them will be required to square off. And similarly, there was a squaring off at 19800, but limited edition at 750 level. So uh, the sentiment is slightly more negative than positive. Now the open interest on both sides. So if you see, the put call ratio is roughly 1. So it is neutral. That is, the put OI is around 15 lakh and call OI is also 15 lakh. So it is neutral. Though the percentage of trade on NSE Nifty is reduced because there are other options now available. Reliance, again, an interesting chart. It is trying to now break through its 20 EMA, which has come below the 50 EMA levels also, and it took support at the 2300 levels, and then it is looking to move up. The other issue is that if you want to maintain the levels of Nifty, then if the IT is correcting, then you have to play HDFC Bank and Reliance. And so Reliance was moving up, but it requires a trigger for it to now go higher. Otherwise, it is weak right now. Nifty Bank Nifty Bank had a weak chart is weak. On the weekly chart, if you see uh, from March onwards, though it has still managed to maintain above the 20 EMA. Now it is at the 20 EMA level only. So at these levels, it is vulnerable. It can go down on Monday also, based on HDFC Bank results. That will swing the whole thing in whichever direction we are looking at. This is the Nifty Bank daily chart. Again, if you see here, so many gap ups and gap downs, so which is making carrying forward positions very difficult for traders. Nifty Bank, it had two-sided movement during the week and a negative close on Friday. So, and the problem now is adding on in the one problem is HDFC Bank, where if you see on a daily chart, this was the last low. So that level is being held 1530, but again it is trying to go above the 20 EMA and facing resistance at that level. Once it goes over that, then there is likelihood of positive, though it had a major fall on fourth, but then it recovered from there and went below 1500, and then it recovered from there. Results are on Monday, so keep your fingers crossed. ICICI Bank, again, it took support at around 200 EMA, and it bounced back from there, but it is facing resistance at its 50 EMA. So it has to cross this 50 EMA level. I'm very actually surprised at the weakness in ICICI Bank, because the results have always been good. There's nothing negative, and but stock has not been able to breach that 1000 odd level convincingly for a long time now. The, the stocks which face pressure is the Nifty PSU Bank. This is a daily chart. It has corrected now, and I think it is getting into a corrective phase. They have lost the momentum, particularly SBI, where there was a downgrade by a big brokerage on Friday. Uh, PSE index, public sector enterprises, is still looking strong. It is trading above the 20 EMA, and it has to, if it breaches this level of 6,000 odd, and then it is likely to go up. All the stocks, NTPC, Power Grid, Coal India, all the railway stocks, the PSU defense stocks, they are doing well. So just hold on to them, and these are good stocks to hold. And just see this PSE index since April has never gone below the 20 EMA. So it's a strong chart, and it is likely to do well. The IT index was a problem, but if you see, it has still managed to stay above the upper trend line, and it has taken support there. Now, let's see what happens from here, because it can go. This is a weekly chart, so the candle was red for the week, but it is still managed to close above this. Above the upper trend line, and if it trades above this, it will recover from there. But if it breaks, then it may head towards the lower trend line also, and in case the subsequent results are not good. But what is keeping the thing good is the order wins. The people are expecting that, the bad news is now in the price, and subsequently the things will improve. a momentum index of the BSE is a weekly chart. It's such a strong chart, and it is going up. And one very interesting thing is, again, if you see, the last time again there was a big moment in the after May 2022, once we had made a low at around 15,000 on Nifty, and when it went up, the best performance was on BSE Momentum Index. And here again now, though it is now consolidating, but still it is above the 20 EMA and all and doing well. So the point is that after the every dip, it is these stocks which are always the ones which perform the best, and they have the clear rally and it outperforms the rest of the indices. The mid-cap index is now consolidating. It has not been able to breach that for a month or so. It is at these same levels, similar levels, and it is not able to get above that. Though till the time it is above the 20 EMA, it is good. Uh, Sentiment in mid caps and small caps, though, is not undisturbed because of this SIP amount of 16,000 crores, which is basically moving into these stocks, and the retail is buying them, retail and mutual funds. Uh, and Similarly, if you see the small cap index, again, similar movement from March lows, but now it is consolidating at these levels. And now I think the performance will depend also on the results and order wins and all those issues. Though last week it had a uh, green candle. This one stock which is giving positive moment is Indusind Bank. I think there is some news of its since there is a lower FI holding maybe coming out after end of this quarter, then there is a probability of its being included in MSCI index or something like that, and that is what was driving the rally on Friday. But overall, its results were good last quarter, and here and from here the rally has started, and just keep holding and accumulate at around 20 EMA levels. Now I'll cover few stocks. First one is Siemens India. It offers products in digitization and decarbonization as an emerging theme player, playing major role in upcoming capex across sectors such as industries, power grids, mobility, building, data centers, etc. With a view to accelerate digital adoption in India across sectors such as power grid, mobility, industry, etc. Siemens launched Accelerator platform in India last year. It comprising Internet of Things enabled hardware, software, and digital services. It emphasized on use of hydrogen-based power as an alternate to renewable power, which is currently being used in data center. So that's a uh, big revenue source. Siemens has developed product technologies for energy efficiency solutions, fuel shift, hybridization, decarbonization to help customer achieve their carbon neutrality targets. Uh, it has a huge potential to adopt digitalization in manufacturing processes. I have listened to their briefings of their people. So they are actually talking about setting up of factories, complete digitalization of the operations, how to have efficiency, productivity, at all levels to have better energy saving, cyber security, remote management, and operational optimization, and everything like that. So they are now getting into this, and this is a stock to be kept in mind. Their results have been good, and it's been constantly been improving. Margins are at that 12 to 15% levels. Net profit is also improving and EPS is also growing. If you see, they are expected to have a year-on-year growth of around 7% out in this year, but next year they're expected to grow around 15%. This is in millions, so roughly a revenue of around uh, 24,000 crores in FY25. So that is roughly 6,000 crores per quarter. Now, if you see here, right now they are doing around 4,500 crores per quarter. So that is around likely to increase by 30-33% per quarter from here. And EBITDA is likely to be improving, and margins are also likely to be new. Profit after tax is expected to grow, and the profits also. EPS is expected to be around 70 in FY25. So you, and with their average PE, if you see, they have been given a PE. Even if you can give it a PE of around 60 times, at 70 EPS they should easily trade at around 4,200 rupees. ROC, ROIC, all these are positive and improving. Debt is, there is no debt, it's a net cash flow positive. Working capital days are decreasing. Dividend yield, it's a pays dividend. EV to sales is going down, so it is not becoming expensive. EV to EBITDA is also going down, so it's in a good state. If you see the technical chart, this was when the results came for the March quarter. The stock went up and then corrected also, and then it has been moving up like this. So it has now corrected a bit, and these one can easily look at that for at these levels for long term prospects, because 3,500 odd should be a decent level to get in, and in case the results are good this quarter, it should perform much better. Next stock which I found very interesting is Zomato, because I studied it a bit in detail this time, and I find that it's not a trading stock; it's a stock to be held as an investment. Uh, the reasons are, food aggregator space is still nascent in India, and there is enough room for revenue growth in the medium term as more and more people enter into the cities and all, and more people start ordering and all that issue. So it's a very is a business where there is a lot of growth and there is hardly any competition. And actually it is stocks like Zomato which are in direct now competition to QSR, because earlier what used to happen was that we used to have Domino's. There was only one, 2-3 years back, which would provide delivery at home and all that in 30 minutes and all. But now with things like Zomato or Swiggy, you have wide range of choice for delivery of food at home. So they are actually competing with these kind of people also. So they are competing with QSRs also, because it gives huge options to the customers. The company's medium-term guidance of 4 to 5% adjusted EBITDA as a proportion of gross order value should be achieved, I think, in this year only, Q3 of FY24, because this is that festival and World Cup quarter and all that. Quick commerce adjusted EBITDA profitability should be achieved by, they have three parts in their business. One is this food delivery. Second is quick commerce, that is Blinkit, should be able to achieve in, as per estimate, in Q1 FY25, and hyper pure adjusted EBITDA losses should reduce from minus 5.7% in Q1 FY24 to minus 3.2% in Q1 FY25 estimate. Hyperpure is the initiative to provide fresh, hygienic, high quality ingredients and supplies to restaurants. So that part is taken care by then. Uh, Ordering frequency increase potential for regular non-gold users. Graduating to gold membership is very meaningful. Now, what is gold? It's a loyalty program. They provide free delivery up to say 10 odd kilometers, and they provide discounts on dining out. Restaurants are advertised. Now the other basic issue is, uh, they are projecting a revenue growth of 25%, 26%, and 20% in food delivery business, and 43%, 34%, and 25% overall for FY24 to 26. Food delivery profit improvement over the last 3 to 4 quarters was driven by strong growth in ad revenues, because the restaurants are advertising on the aggregator platforms. Uh, They have also started to charge customers platform fees for food delivery. This is likely to further aid profitability improvement. They had around 18 lakh gold users as of March end FY23, which is, I think, likely to grow to around 25 odd lakh in a year or so. So the ordering frequency of these gold users is, I think, around 9 orders per month or so, while for the others it's around 2 or 3. So this is likely to improve, and more people become get onto that platform and loyalty programs and all that. So the revenue potential or the stability of the revenue improves. Here, if you see the quarterly run rate, again, if you see the revenues are constantly going up and the losses are coming down. Operating margins are now about to break into positive territory. So the it is likely to be profitable now shortly. Uh, though it was net profit, it made some 2 crore or net profit in June. Uh, this is the expectation. So if you see FY25, this is in millions. So the revenues are likely to be around 16,000 crores in FY25. That is double from now. This is what is expectation. So adjusted EBITDA would be around 2,000 odd crores. Margins at around 13%. What they are expecting at end of this year it will be around 4 to 5%, but likely to grow. And it will be 1,000 odd crores of net profit with an EPS of around 1.5 to 2 rupees. So at 2 rupees, if you give it at 50, 60 times with the growth it is having, it is 120, 100 to 120 is a fair value. Uh, that is what is being given now. And EV EBITDA is improving, ROC is improving, ROE is improving. These are the key ratios if you see. So EPS is expected is around 1.9 as I brought out, and rest all parameters are likely to improve now. And if the business is okay, only thing is that they should not do anything stupid. Uh, so if you see this chart of Zomato, from after April, this stock has always been above the 20 EMA, and it's a very strong chart. It has these spikes because of volumes or buying, and then it comes back and takes support at 20 EMA. So I personally feel that once it comes to this 20 EMA or something like that, that should be a good opportunity to buy, because if it has not gone below the 20 EMA, it is unlikely to go down also. And it's a duopoly now with one Swiggy and them, and they are the only listed ones. So there is hardly any other competition at this scale. Now the other interesting stock is Adani Ports. Uh, it's the largest private port operator with more than 24% market share in cargo handling in India. It has improved its reach, has got certain strategic port locations, operational efficiencies, and a comprehensive range of integrated service offering, that is logistics, special economic zones, which have contributed to Adani Port's remarkable growth. Uh, it started with 2 ports in Gujarat in FY11, and now it has a portfolio of around 14 ports across the western and eastern coast of the country. Kindly keep your volumes switched off. It has acquired 70% stake in Israel's Haifa port, consortium with Israel's Gedot Group. Haifa is one of the Israel's two biggest commercial ports and handles nearly half of Israel's container cargo. And this was the one which was in news, because of which the Adani stocks corrected. With the addition of new ports, improvement in utilization levels of existing ports, and a moderating capex, the cash flow generation is expected to remain strong. EBITDA margins are around 60 to 64% over the past 5 years, with operating leverage and efficiency measures. Overall, EBITDA margin is expected to remain steady at similar levels over FY23-25, despite significant growth in low margin logistics segment. It is strengthening its market dominance, achieving 12% volume CAGR over FY 23-25. That would propel a corresponding 15% CAGR in both revenue and EBITDA. PAT profit will grow, report around 20 to 22% CAGR over FY 23 to FY 25. Now, this is the quarterly results. So, if you see here again, the volumes or the sales have nearly doubled in 2 to 3 years. Uh, Operating profits have also grown. The margins are as the scale has gone up, and now they are doing acquisitions and all, and lot of capex. So they are at around 60%, but likely to improve. Uh, Net profit has improved now and nearly doubled over the last few years now. And the other issue is uh, their cash flow generation should keep the major problem with them was their debt. So the cash flows generation should keep the debt in check. Now, if you see, this is their ports. The western coast capacity, installed capacity is around 355 million metric tons, and east coast installed capacity is 247 million metric tons. What they have done is, if you see on the east coast, they are developing this Haldia port here in West Bengal. Dhamra port is already developed and capex is over, and they are now adding capacity here. Uh, this Gangavaram and Krishnapatnam, again, they have developed two ports. This Gangavaram is just next to Vizag only. So, again, these have been developed. The other interesting port which they are now developing is this Kerala port, port of Viznam. Again, Viznizam. This will, I'll show you subsequently how it will aid them. Uh, while on the western coast, the Digi, Hazira, and Mundra. The Mundra is their largest commercial port by volume, and is their key port for various issues. And it has got a very strategic location also. I'll show you subsequently. So cargo handled and market share has gone up. So they are handling around in FY23 339 million metric tons, and I think they have a capacity around 600 odd million metric tons. So they are likely to grow much more because they have a lot of capacity. And share in overall cargo of India has increased to from around 6% to around 24% now. Uh, why I was telling that this Vizinjam port is important. This is the major trade route used all over the world. Now, what happens is a lot of containers and all that, which are meant for India, are downloaded at Colombo and all because people don't want to go in. The large ships don't want to go inside, so it is downloaded at Colombo or Singapore, and then from there it is carried. Now, this one shows extra sailing distance, extra sailing days, and per uh, incremental cost. So, if you see, uh, because of this port, this will become a major transshipment point from where they would be able to take on the lot of volumes which are going to Colombo for India because of the strategic location of this port. You can see the distances, otherwise the ships have to go inside and enter there. Hence, this port becomes important, and that was why the Colombo port was also important because of this reason. So as to cut down the extra sailing distance and extra sailing days. Now, what they have done is, uh, this is the, if you see, this is the western dedicated freight corridor, and this is the eastern dedicated freight corridor. Now, this is still being operationalized or not fully completed and likely to be completed, I think, next year. But this one is already operationalized, and it is likely to take on a lot of capacity and give them a lot of leverage to take product from here to complete North India. So what happens is, here from Mundra here, they get connected to Palanpur, that is this Palanpur, and from there they are on this freight corridor. It takes them up to Punjab and Dadri and all these places where all the uh, refineries and others are located. So it cuts down their cost and other issues. And also this Mundra port is pretty strategically located to all the trade route for uh, import of all the crude and natural gas and all those issues. So this is the key issue. And now if you see here, this again, once this is developed again next year, uh, this they're making this port in Haldia, which will be on this route. Now this is where their Damra port is there. Again, it is well connected, and others are also connected by roll and rate to this freight corridor. So it will help them transport thing and reduce the load on both sides. So the acquisitions of, as I showed on the last one, uh, the acquisition of Krishnapatnam and Gangavaram ports with additional capacities are giving them more flexibility now. Though the flagship port still is Mundra only, and so these are the things to be kept in mind. The Mundra port, as I told you, there is a rail line connecting to Delhi Bhatinda, which is closer than the line from Mumbai. So this is roughly around 250, which I showed you. Uh, this is around 250 kilometers, and this is around 650 kilometers. So the time is reduced if you travel here, uh, and it is has proximity to the key northern areas and and also has lower traffic, because this Mumbai rail route has got a lot of other traffic also. Hence, the Mundra has become a preferred port of call for ships, and it has got a lot of proximity to Middle East for crude, which is beneficial. Krishnapatnam, as I showed you, can become Mundra of the East, which is why they are developing it. They have taken it over. Right now, as I showed you, their overall utilization is around 50 to 60% of existing ports. So there is a lot of availability of place for growth. And as I showed you, the transshipment port of Vishinjam in Kerala, it will shift volume from Colombo, which handles approximately around 60% of India's transshipment container volumes. Hence, again, that will add to their revenues and all, because it will cut down the cost and other issues. So if you see their ratios, they are expected to get a EPS of around 45 or in FY25. So at 45, you can easily give them a PE of around 20 to 25. So that will take them to around 1,000 straight away. Uh, the value, it generally trades at around 35 to 25 P. So that's why I was giving a 25 P here. So 45, 46 into 25, you can easily say where it goes. Uh, EV EBITDA is again gone down. Now you see, it is at EV EBITDA of around 14 to 12 times FY24, FY25, which is the same EV EBITDA at which this JSW infrastructure port, which recently listed, is also trading. And this has got much more size and bigger growth potential. So it is actually at a discount to the other ones. The ROE, ROC, ROIC are okay. The key issue with Reliance is, with the Adani ports is net debt to EBITDA, which is now gone down. So their capacity to manage their debt is better. So it has 2.3 times. And net debt to equity, despite all those things, has come down to below it's around 0.7 or to below 1, so which is manageable. So it hasn't got too much of debt. This is the chart of Adani ports. So if you see here, it went up and then it corrected, and then on Monday it went to around 780 odd on this Haifa port news. But the point is, similarly, the news came out that Haifa is actually 1.3% of the SO2P valuation, which has been calculated for Adani ports, and only handles 3% of the volume, though it will going to improve subsequently. Hence, the stock went up again, back up to this 20 EMA on Tuesday, and now it is trading. It took support at 50 EMA and is trading somewhere in this range. So this is a anytime there is a dip, it's a good accumulation zone, and if you can hold it for long term, because the likelihood of things going wrong and all here is not that much, because it is the one where there is actual assets on ground here, and there is nothing like too much of speculation and all that. So I have finished. We'll take the questions from here.